Hello, everybody, and welcome to the Plus Three Futures and Commodities show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi, and we are recording Friday, December 20th at 3 p.m. Eastern, 1 hour before the close. How we doing, Barry?
Doing pretty good. Doing pretty good.
Yeah, it's like, today's show, we're going to talk about, this is our last show before Christmas.
Hmm.
Maybe we may do one before a surprise Christmas present, but we'll see.
Hmm.
But this is probably our last show. And isn't it great that the markets are sort of sleepy and now into this holiday mode where there's nothing really big happening?
Yeah, yeah. Well, we talked about that, right? We talked about how when volatility is really tight, we're about to enter some kind of crazy. So,
And the irony is it's usually during a period of low volume and just sort of steady advances. And
hmm, hmm,
you see the Santa Claus rally. Well, this year is going to be a little different.
hmm.
We're going to spend a lot of time today, sort of going over all the evidence and sort of arming you with the information and the levels you need to navigate this thing because I think the volatility and the craziness is just beginning. It's not ending. With that, with no further ado, let's look at the Christmassy red and green SPX chart.
Yeah, that's year around Christmas at the S&P. So last week we left off with, can you hear me okay?
Yeah, it's no
All
problem.
right, all right. So last week we left off with what was the number? 60-20, right, Ben?
And we were hanging on 60-20, just going
Yep.
sideways,
Hmm.
no real direction.
And the thing was, it was holding above 60-20, and I had the zone drawn out saying that should be like the maximum. Of course, the market goes a little bit more than that,
Hmm.
and we could have just as well held perfectly under, but nope. We want to fool everybody, right?
Yep.
Anyway, we were sitting on top, but we wanted to see, if we can market can hold above and start to move above, or are we going to lose the 60-20? So basis the daily, we started slipping. You saw what happened. I mean, actually, we started slipping before FOMC.
Hmm.
And you guys know from last week, the only other level I had was this 58.48. And sure enough, we made that run without any kind of hesitation, let's say.
Hmm.
And now we're back to this range between 58.48 and 60.20, which is sort of the range that we spent some time in November. So we had a number of cycles that came in. We talked about them last week. So if you guys missed it, check out last week's show and the week before. I think every week we talked about what's coming up ahead.
Sure.
And so here last week we talked about this 90-day cycle that came in, and we squared out, but it was holding above. This is the March contract. Sure enough, we were kind of like in the cash. We were holding above the 50% level, and we were trying to triangulate. And eventually, we had a reversal setup, and on Wednesday we broke down. Now, the importance of that breakdown is the fact that we had a 90-day cycle going into that. So when that happens, and if it gets traction, normally it's a fairly good high. So that's on the daily level. So let's keep that in mind. Here's the continuous chart. Same deal. We broke through the 60-40, which was the 50% of the square based on the continuous contract. And I showed you guys what happened when we,
Moved it to the higher
yeah,
low. Hmm.
used the higher the first low and not the false break low. We came up right up. This is what we were watching earlier. I had moved that square. Well,
Hmm.
we were sitting right under the entire time. The contract changed premium. We shot up, tapped the pretty much tapped, got close enough for the ABCD to complete. And
And there you go.
once the 50% was taken out, we slipped right through to 58.92 was the level, support level. We had some structural support. And I can't remember how we got to 58.92, but anyway, it's on the board. It's been on the board.
Hmm.
And obviously we held it there. And with a big bounce to boot today.
Also, big shout out to the Rebel Yell cycle, which said the fifth was the hit.
Yeah, absolutely. Nailed it.
And if you look at the at the December contract, that was the high was the next day, the
High was
6th.
in there, yeah, without the premium in there. Well, if you look at the
Hmm.
cash, it's in there too, right?
Yeah, the cash is
Yeah, so
perfect
there it
right
is.
there.
Rebel Yell came in. So what else we have? Wow, let's take a look at the Dow. Remember, we were talking about the Dow last week, saying, "Hey, listen, is the Dow leading? Is this like a sign that,
Right.
right? Remember that?"
Down 8 or 9 days in a row. Yeah.
Mm-hmm. And we're also kind of doing this huge, potentially huge expanding triangle. So far, it's an expanding triangle. We'll see how it works out.
Hmm.
But anyway, you guys can see the power of the squares. We're running a square 72. We've been on this, and we had this 44,300 to 44,000, looks like 870 to 880. That zone here, anyway, you can see the blue zone here marked off as the sort of the maximum. It's a good target for this run. And yeah, I think anytime a target gets blown up by a little bit like this, a market goes through and just stalls. To me, it's just a way to get more people in. And,
Hmm.
and and those are always good to watch. And the reversals that come off of those end up being, you know, let's just say memorable. So
Hmm.
in this case, we were up there for a few days, rolled over. We talked about that, and then sure enough, this week we came back. But the point here was how powerful these square lines are. We're 216 degrees up with three squares of 72. You can see how we moved from 50% of the square to the full square, right? And this is why we always talk about, if it's holding above, then we're looking to see if we can move higher towards the 50%. And if we're stuck there, we're looking for direction. Either we're going to clear it and get to the upper side of the square, or we're going to fail and retest the lows, or worse,
Right.
right?
Right. Hmm.
And so that's the basic theory, right, of squares, if you guys are new. Anyway, so the Dow basically corrected and on stalled off on support. Um, Mostly the other markets did too. I mean, the futures, of course, have to overdo it a little bit, so went below a little bit more than half a square. And we have the SPX, which not quite half a square yet, but it's it's just getting started. So we'll see what
Right. That's
happens.
right. Heading there.
Hmm. So for now, on the daily 60/20 is really the level to watch. And all that time we spent above, now it ends up, adding weight to it. So that, we'll consider that to be overhead resistance, and we'll see how it works when we go up to reach that, if we can get up there. It looks like we could. So the next thing, because of all the cycles that came in and all the cycles, we talked about the weekly and the dailies in the last few episodes, and you guys can check those. But anyway, the Rebel Yell cycle hit here, the 90 hit here, and a couple of other things hit. So what that means is our stance now is basically going from, looking to, sort of being stalled at the 60/20, trading that narrow price action. Now we're looking to see if we can get a lower high, obviously, right?
The fat pitch is on a fat pitch
Hmm.
alert.
Yep. And the lower high would be ideal. As tricky as this has been, I'm thinking a false break would be just as ideal. So, I mean, that would really
Hmm.
cap it. So we'll see how that works out.
It looks
Anything
like
you
you
want?
got three drives there on the S&P too.
I mean, this one,
One.
two,
Yep.
three. It looks
Yeah.
pretty good. It looks pretty good. Anyway, it's a trade-worthy high. Not much more to add because we've been covering it every week, right? We talked about
Hmm.
what could happen and all the cycles coming in. And last week we talked about the variable yield cycle. So there was a lot going on. Now let's take a look at the weeklies. Let's see, before we get to the weekly, well, here's the December contract I was talking about. This square came in
Yeah.
right there,
Yeah.
and then we failed, and that was the failed. Here's the ABCD. There's a box. So generally speaking, we were within the sweet spot, right? For the
Right.
Dartley
Hey, if we go a couple weeks in that, Barry, what's the time frame where we hit the side of
time. Well, it depends when we get there, but let's say we're a
right?
couple of bars. Let's say we go January 1st would be right around 58.88.
Hmm.
I don't know. I think the square could have gotten blown out. I'd like to see it hit it first, because
Yeah,
it's
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 true.
it's been a I just kind of kept it for just for the memories. The one to watch was the square that came in. which worked just perfectly.
Hmm.
But here's the more important thing is the cash, the weekly, and this is that big circle, the arc we were watching.
Sure.
And sure, it's definitely off, but we definitely, we stopped at that um, line I had on the chart, the geometric line,
Hmm.
and we more or less got to the ABCD
Yep.
and the zone. So I think it's good enough, for me to think that, and the reaction that we got off of that for whatever reason,
Was
it looks,
significant. Yep.
yeah, I think so. Which tells me, okay, we might have some traction here, so we have to behave that way. But for the weekly, I think till we get below 58.10, we're still firmly holding about 144. So we have to really watch that. And once we get through that, then I think we can look for some kind of a bigger move if that happens. Up until then, we really want to watch this 58.10, and if we're going to hold here, just on the background, because this is what we have to watch. The actual square was off by a few bars, but it still came in. So let's just watch. These aren't, these things don't always work perfectly to the tick. It's a little bit rough out there. It's a jungle, right?
Hmm.
And you have to kind of find your way through. So far, I think my take is the high looks good. It came in. Looks like we have traction. To me, the big deal was that 90-day cycle coming in, and we'll trade it forward. Well, just like that. So
Hmm.
that's that. Let me see if there's anything else here. Well, here's the weekly continuous chart that we looked at last week, and this is coming from the 2020 low. And we talked about the square that was setting up, and we basically hit it perfectly at the high.
Bullseye. Bullseye,
Bullseye.
man.
Yeah. You can't. That's pretty much on. And here the deal is it's 58.08, 58.10, close enough. That's the level we really want to watch. And this, interestingly, the other one was square 72, and we come about 58.10, right? Was that? Yeah. And here we're coming off the 2020 low with a square of 90, and we have 225 degrees up, right about there, 58.10, 58.08, somewhere in there. So we want to watch that level to see if we take it out. But now once we take it out, that's when I think real trouble starts. For now, it's sort of early stages of whatever
What
it's
did you talk
doing.
about? The 225 there?
Yeah, I'm talking about this
Hmm.
level. It's
Hmm.
right about 58.10, 58.08, right there.
Hmm.
And what else? This is from the '09 lows. We looked at this a while back. I think this is a square of the range. No, square of the low. And we
Hmm.
got to 50%. I think this is okay. We could say it came in here and then we did a false break, especially since we, got out of there in a hurry. The reason I'm going through these are just to show how many ABCDs sort of came to completion, you know, going up into that high, and how many price levels showed up. So I think that's kind of important.
A lot of evidence.
Yeah, there's enough evidence to sort of take it seriously. And here's the Russell. This is the weekly Russell. Well, here we talked about this being a potential false break a couple of weeks ago. And sure enough, that's exactly what it looks like now. We have from the 2020 low again, we're 180 degrees up. So it stopped it here back in 2021, and now we're, sort of double topping it.
Even with a little false break to boot.
Yeah, exactly. Well, that's the key here. So
Right.
we talked about that a couple 3 weeks ago when it happened. And maybe it could have been a midweek show. But anyway, that said, we talked about how we want to see it, if it's going to hold above this 2400 or not. Obviously, we slipped through there. So now on any kind of a counter trend, that 2400 is the level you guys going to have to watch. And yeah, that's it for the Russell. I went through that round just to sort of look at if this high came in from a number of places or not, right? So
Hmm.
we had it show up from a bunch of different places. So I think it's good enough. Okay, so that's pretty good. I think that's enough for the indices, right? And also we also cover it daily on X, and We both post on it for the SPX, Nasdaq. So if you guys want to catch it, follow it. There we
Hmm.
talk about it much on a daily basis, so it's a little bit tighter coverage. You know what I didn't get a chance to look at, and that was a 30-minute. Hang on, give me 1 second.
And the evidence you presented, Barry, is important because especially that one weekly chart from the 2020 low, because that sort of kicked this whole thing off.
Yes, yeah, and that
This
was it.
particular leg got kicked
Mm-hmm.
off at those COVID lows.
Yep, from the leg that started there.
Hmm.
So here's the 30-minute, and this is, we post this every day with an update and comments. You can see what happened this week, and 61.24 was the level to watch. Now, if you guys are watching from last week to this week, we had a contract change. So this is the March contract. So the numbers have changed, but the squares are pretty much the same.
Hmm.
So 61.24 was the level, and there was a corresponding level on the December contract that you guys were watching. I can't remember it now. Anyway, either we were going to hold above it or not. So, we basically just lost it on the 18th, went right down to 54, 59.42 level, which was a full square, and kind of managed to hang above that for a while. Then, on the 19th, we broke below, made lows overnight, early into the morning, and basically held it at the 58.69, which is the level that was on the chart, and then 58.52 is the 50% level. And I had this zone marked out. We were looking for a low here, and sure enough, low came in, went right back up to the 60.33 level, which is 50% of the square. As you guys know, if it gets to any kind of a key level, we want to see if it can hold above that and set up to trade longer, or if you're going to sort of fold under it and be weaker. So we had the first run up, and then we got in. You can see we did an A, B, C, and basically these on the way, I would say, because we have a new low.
Hmm.
Anyway, you can see it stalled there. So going into next week, obviously this 60.33 is a level to watch to see if we can somehow break above it, hold up here, and challenge 61.24. Or if we get stalled below the 50% level, then we're probably going to visit this 59.42.
Hmm.
And if you follow this on a daily basis, you can watch these levels intraday to see what happens, where we get the support resistance. So obviously, you know, pulling back into 59.87 would be support, and it might pull back down that deep in order, before we get rolling again. So these are the numbers to watch. I think 60.33 and 59.42 is enough to get us started,
Hmm.
right? Yeah. All right. Let's move on to bonds.
Had an interesting week, didn't they?
Yeah, bonds had an interesting week for sure. Surprising? No. Interesting?
No.
Yes. So a couple of weeks ago, we talked about how, we have this trend line and how we came from below, like kiss from below. And that
Hmm.
happened right about around this 19 and a half level. And the idea there again was to see if we can hold above that or not. And if we were going to go up to the 50% level, which it couldn't. So once it started slipping, then I think last week we talked about how if it gets down to 45 again, we're probably going to take this out.
We
At least,
did.
yeah, we did. And the false break it. Bonds are okay. Bonds are, yeah, compared to the S&P, bonds are way easier. But anyway, now we have this low from April, and that looks to be like the next target to me, especially since
Hmm.
we're just kind of stuck below this 45, which is at 116.11. And long as we're below that, let it have it. I mean, look at how many counter trends we had. This is really the first counter trend is today,
Yes.
right? It
Yep.
was just straight down.
Hmm.
And so let's say we have 1 or 2 days, and long as we're holding below, it's 116.11, it's weakish, let's just say. And the next support is 110.22, 110 and a half. Looks like it. And we also have structural support there over here from October 23, that little consolidation. So that looks good, and it'll give us a false break here. I mean, a break here, a potential false break. And if you guys don't remember, or if you're new, we also called out this high, which started the entire leg.
Hmm.
We squared out here, and you can see that square didn't really carry much, which we talked about, over the days and
I
weeks.
mean, it couldn't even retrace 50% of that down move.
Yeah, so that's why, and we talked about trend lines last week. When we know those things, the simple trend line break is, you know, pretty much all you need. It's good enough,
Hmm.
for the trade.
Right.
So, which makes things easier. You don't have so many things in the mix.
Hmm.
Let's take a look at the weekly bonds. Now, somebody put an ABCD on there. Did we do that last week? Yes, we
Yep.
did.
Hmm.
So 114, our target. Sure enough, we came and tapped it again this week, and we're running a square of 52 on this weekly, and we're 3 squares down, 156 degrees down. And here's the 114. And boy, we keep talking about this. If that goes, we're definitely going to go up and challenge the lows back in 23. So that's once
Hmm.
on deck. And either we're going to save it for now or not. It looks like we're headed down. So that looks like the direction at some point. Um, so far, this ABCD looks good to me. So I'll leave it on there. We'll see what happens. But remember,
Hmm.
this 114 area was a target, and I'll tell you what this 156 is exactly. Let's say it's 113 and a half. So there's a 1 point little bit of leeway here. If we get below that is, when the next leg's going to start. Up here, could we expect some kind of a bounce? Yes, we can. So if you trade it from, again, this is our basic, thesis is or the approach is to trade from, well, square to square. And here from 50% of the square to the full square, that was the trade. Now we have to pause and see which way we're going to go. And it looks like that being such a solid level of support, we might get a little bounce, but otherwise we know where it's going to go. And now you guys know. All right. Let's move on to crude, which is just putting us all to sleep. Probably not for long though, right? We know what happens when
No,
these kind of patterns
yeah,
show up, especially in crude.
absolutely.
So something's cooking and it's going to be good. That's all I can say because because we're right in the middle of our
Right in the
bracket,
middle of the triangle. Yep.
in middle of the triangle, the middle of the bracket. Now, you can't get any more
Hmm.
middle than that. So
Hmm.
from here, obviously, we're going to move one way or the other, and it looks like we're holding the lows, we're making higher lows. So long as we do that, we can look for to go up and tap 73.50. If we fail that, 64.75 or lower, the 61.61. This zone here would be ideal to kind of flush this out before going, and hopefully that might happen. Um, but we'll see. Right now, we're not really doing much in crude because there isn't a whole lot to do. Some kind of a flush here and then a whip around would be my preferred sort of the pattern. But
Right.
you never know, right? We can do these things quietly, like natural gas. We might just quietly sort of rise up, but then we have a trigger here, obviously the upper trend line, and then we have 73.50. So if it can get on top, the idea being that if it gets on top, then we'll have much better momentum to deal with.
And big developments in natural gas too this week. We'll talk about that.
Yeah, let's take a look at that. You're going to cover that in a minute.
Hmm. Hmm.
So the weekly, you guys are probably pretty familiar with the chart. We're holding perfectly above this square of 60. The highs came in
Oh,
at 120, 2 squares up. Yeah.
a little too perfect, right?
Yeah, right. But the weekly charts are that's why we look at weekly charts for, they give you
Right.
that right perspective so you don't get
Hmm.
caught up in this crazy. So the thing here is this is also narrowing. I mean, I don't know how much narrower these things can get, but obviously it's going to get as tight as it can possibly get before unwinding. So I would say start watching. This is getting close. Something's up. And like I said, hopefully I would love to see some kind of a breakdown first before we whip around. Easier to catch them that way. but we'll take anything out. But after this, Ben, I mean, we know this is going to be in the 150 zone
A
easily,
lot of energy is building up in there.
right? And my take is if we take off, I mean, this could be middle of next year, end of next year, I don't know. But when we finally do it, we're obviously going to take these out. And if we take
Yeah.
these out, I'm seeing, that square, next resistance is back up at 150, 156 level,
It's like
which is,
150 or 30, you know?
yeah, yeah. And this is, the funny thing is when you talk up to numbers like that is unthinkable, but you see how many unthinkable prices have come to pass this year that we talked about earlier.
Just go take a look at cocoa if you need an example.
Yeah, there you go.
Right.
Or the dollar,
Or
right?
the dollar, right.
And a bunch of other things. So anyway, this is so let's be patient with crude. We'll watch it and try to catch it before
Hmm.
it gets out of the gate.
Hmm.
Here's gold still.
Yeah,
Uh-huh.
gold is just doing a nice consolidation after a hell of a run.
Yeah, in typical gold fashion. So I think
Yeah.
we have to allow it to do that. And
I
it's
mean, but
also
if you listen to people talk about it, they're either like ebullient about it, oh my God, it's going to 10,000, or oh, it's going back to 1,000. There's
yeah.
nobody's just appreciating that you made a huge run and now it's consolidating.
Yeah, it doesn't have to be all or nothing, right? I mean, there's a
Right,
whole lot that happened in
right,
there.
right.
So anyway, I'm just watching the triangle here. This looks very bullish. So
Hmm.
once that works itself out, or whenever that's done, it'll. My guess is it's probably going to break to the upside, unless otherwise. But we'll see. Right now, we're basically crisscrossing this 50% level,
Hmm.
and that doesn't add a lot of confidence to me. So we need to settle on one side or the other. The fact that we're above the 180 tells me, we held it here, tells me that gold's in a very firm position and it's in demand, and we could dial up momentum anytime. But getting above the 50% is really when it becomes sort of trade worthy, because we didn't really, I mean, this part was good. Going from the square to the 50% was a good trade. But around the 50%, we really want to see it get to one side or the other. And for now, it looks like it's just doing the triangle, but we can get to 50%, we can figure out what to do next. So the 50% level is 2670, 2671. We'll watch that. And the 180 level is 2550. So those are the
Hmm.
two numbers to work with. But I think the cooler chart of the two, meaning the um, the weekly, is a better chart for me,
Hmm.
because it was very clear how the highs came in, and which helps you kind of relax about it, right? And not get not get too anxious about charts. So we know the high came in. It was the so 144 by 108 came in a couple of bars early, but fine. We did get the drop. We did get to the target. So those things kind of help us triangulate, the idea.
It's
It's a
just rest
high.
and waiting for its next up leg, really.
Yeah, yeah. And if you look at the weekly, it's holding just above this support level here. And it has room all the way down to the 50%, which would still be great. Even if it comes down to here, it's great. Because
I
remember
mean,
the old highs. I mean, we were talking
yeah,
about it breaking out
at
way back.
2,100. Yeah.
Yeah.
I mean, but look how it does, Barry. It's done it three different. This is the third time it's doing it. It makes a move up, consolidates underneath a level, and then goes. Makes a move up, consolidates under the half square, and
Mm-hmm,
goes.
mm-hmm.
And now we're doing the same thing, consolidating under
Sure
the
enough, we
144.
consolidated here,
Exactly.
consolidate here. So
Yep.
one, two,
And
three.
this is number three. Yep.
Mm-hmm. Well, now the thing here is, we had this big time and price come in, so it might take a little
Hmm.
longer. We might do an ABCD down, like we said.
Maybe. Yep.
Long as we're above the 50%, I think we're in pretty good shape. That's
In very good
2480.
shape. Yep.
Mm-hmm. So that's gold. Let's take a look
Hmm.
at copper.
I'm not going to cover silver, but silver's doing the same thing. It's doing an ABCD down, and it's just correcting the big move, and
Mm-hmm.
it's still bullish in the bigger picture.
Yeah, we had a couple of requests, people asking us to do silver on a regular basis, so maybe we can start that next week,
Sure,
next year.
sure.
Throw
Next year,
everything
there
over
you
the
go.
next year.
Yeah.
So here's copper. We have a 60-degree square on it, and it's been working wonderfully. So 405 is the level. And you can see a little bit like crude, we're kind of, same kind of a triangle pattern with
Yeah,
flat
yep,
bottom.
very
Uh,
true.
and we're holding, and it's getting narrower. The trend lines are in place. You can see we did complete that first ABCD, so that's there. This one here, so that low held, higher low, and a higher low again. So it's right on the square. So if we can hold it, we're expecting it to move higher. If we fail this, then clearly there's a lot of downside left, because after these 2 or 3, 4 tests, we're not gonna. I don't see a whole test going on other than kind of complete rollover.
Right.
And so we got to watch that carefully. If you fail this, it could be a kind of a big fail at this point. So watch that. You guys trade
Hmm.
copper.
Could also be a flush and go. You got to always be aware of that,
It could be a
especially
flush. It could be a flush.
especially in commodities.
Hmm. So here's here's the weekly copper. The chart's been working pretty well. Looks like we're starting to put in a triangle here, and it's starting to lose it. I mean, this is the thing I'm saying. If we lose that 405, this doesn't really bode well. Because the weekly is
Right.
already kind of on shaky legs.
Because we're below getting stuck below the 144, and that's problematic.
Exactly. And we really do want it to be above that. So if it's
Hmm.
below that, we have to treat it that way. And here's the triangle that's forming. So if the low of this goes, we could really kind of go. 365 is what it looks like basis the weekly. So that could be the deal, 365, or obviously anywhere else. But if we're talking, since we talk about in terms of square lines, I mean, this is a full square. We slipped under. We tried to get above. We failed. So now, if we fail here, we're going to get, here's the next support level, which, is the one we tested before running up. That last run, I
Hmm.
remember that. Yeah.
Hmm. Right
So,
into the square.
so it all could
Did
be good. Let's watch it for now. But long as we're kind of, I mean, we got very close to it this week, very close to the 144 last week. All right, let's move over to the dollar. Is there anything you
Mhm.
want to add on copper, or we're good?
No, I think you hit
We're
it.
good, right?
It's
Yeah.
consolidating. Let it finish up, and
Yeah, let it finish what it's doing.
then we'll get the direction.
Hmm. So the dollar, and we were looking for some kind of a potential square coming up in here,
Hmm.
which would be ideally Monday, but we'll take plus 1 day.
Yeah, for sure.
And the exact number was, 107.80, 107.90.
And look at that. You got
Uh,
an outside reversal bar today.
I thought reversal right at the number. So, and we
Hmm.
completed that ABCD. Little overshot, but that's okay
Hmm.
considering the news. So we'll see. We're going to kind of pause because we're right on the 60-degree line. That said, long as we're above 107, 107 and a quarter, I think dollar is still strong. So we'll watch that level. We can get down to 107 and still be just fine, which is right there.
Hmm.
Okay, so dollar is still okay, but we want to watch the 60 by 60 square next week to see if there's some kind of another correction after that
Yeah,
square. I'm going to
that in,
count. Uh-huh.
I was just say that in combination with the outside reversal bar and being above and now below the 60, you gotta
Hmm.
you gotta watch it.
Yeah, we got to watch that, especially when it's a little bit of a potential of
False
kind of a false
break.
break here.
Hmm.
So
A lot
we
of
got to
stuff
watch.
lining up.
Yeah, and it's been good. So when it gets to these levels again, we got to watch them. So that's no
Hmm.
problem. Looking at the weekly, now here you can see we can get down to all the way to 106.75. We're doing great. And dollar's been a really, great trade, right? Anything related to the dollar, the euro we'll look at in a minute. We had this big triangle, speaking of triangles, we had this big triangle coming in, did the false break to the downside. We called out the support, the 90-degree level, ran right up to the other side, broke to the upside, check back, and then rally. So it feels like it's not finished, basis the weekly for sure.
Hmm.
And long as we're holding above this 106.75, and at worst, like 106, 106, 106.20, which is right around the 50% level, dollars in a sort of ramped up state, meaning it could move quickly, you know,
Hmm.
versus when it's below the 50% level. It could move down quickly, but maybe not so much ramped up as above the 50%. So anyway, that's something to watch for now, but there is room to correct. So I guess that's the thing to watch, to remember. Good enough?
Yeah.
Because the daily kind of, that's the story. We want to watch what happens right around this 107.80 next week.
Hmm. Hmm.
Whichever way we settle, we can still trade it, but we want to have it have it settle first.
We want to be able to decipher the effect of this square, see if it's major or
Yeah,
minor.
exactly,
Hmm.
exactly. I think we should be able to do that.
Hmm.
All right, now we move on to the euro, and we did finally come down and tap the 90 again, and it doesn't look very convincing. It's
No.
kind of hanging in there. So it looks like it is eventually going to roll over. But anytime we make a full 90-degree move, we want to watch it. Is it a high or low? Well, yeah, but not very healthy looking.
Mm.
So I'm thinking we're going to be below. I mean, between 10, let's see, oh 06 142 and 03 950. This is sort of the range for now until we take out the lows. I think the key here is to see when we get stuck below this 90, which is like 103950. We get stuck below that, then I think that opens up a lot more below. And it will. It's just a matter of time. So, and if we go from the high, the last swing high, we did do 90 pretty much exactly. So I think it's some kind of a reaction or counter trend is normal here, kind of like the 60 in the dollar. So I think maybe a little bit more of a consolidation or a counter trend for now.
Hmm.
Makes sense, right? Yeah.
Yep.
Mhm. And here's the weekly. Again, we're at the 50% level.
Key spot.
Key's very, very key. And we dipped below a little bit, but not, didn't, kind of got bought up right away. But as long as we're hanging around very close to the 50% here, it's well, it could definitely slip through. But looking at the bigger picture, meaning the daily and the dollar combined, it looks like we could consolidate here, maybe do a little counter trend before we continue.
Agreed.
Okay. All right. Let's see what else we got here. Hang Sang acting like didn't even get the email. All the funds on this side. It's just
Yes.
like a yawn, just like you were saying, like typical Christmas kind of trading, right?
Right.
This
That's
week.
more like it.
Yeah, yeah, not much happening at all.
Hmm.
So 19,450 is really the level. If we above that, it's in good shape, meaning not forever, but it's good shape in relation to the low that we had. And yeah, it could move higher. And here we're making a higher low. So far it's okay. And the full square level is 1919. So 1919, let's say 1920 to 19,450 is really the level to watch. I'm sorry, let's say 19,200 to 19,450 is sort of a buffer zone. As long as we're above that, Hang Seng's in pretty good shape. And you're going to look at natural gas
Absolutely.
this week? Yeah, you are. Okay.
Hmm.
So it looks good. Now we've been talking about lows here and how great this is and amazing all this time, and now it's slowly starting to move up.
It's
You can
starting to
see,
launch.
and here, we had even with the contract change and everything, with 50%, the quarter of the square held nicely,
Hmm.
and it looks like if we just have to break this upper channel, we should be in good shape. All right, that's all I got. Let me put it back to you,
Okay.
and we'll cover the
There's a lot to
Nasdaq,
cover, and
Bitcoin. Yeah, yeah, some good stuff.
you did a good job covering it.
Um, Thanks. Let me put it back to you. Okay, right on time. That's what they say.
Mhm. So
Not bad, not bad.
now we've been looking at this as an area of, concern. First, the first high we got, which we called out, was in July, and then this
Hmm.
thing was lagging while the S&P and the Dow were making highs.
Mm-hmm.
And then it caught up like hell for the last, month or
Mm-hmm.
so.
Mm-hmm. Yeah.
Key thing is we came in on this timing and we're looking at essentially 2.5 squares up in price,
300
squares of
bars looks like,
60.
right?
Yep. And then 300 in time. And so this is a good square. And you can see we've gotten a reaction off of it.
Mm-hmm.
The first thing to notice and to watch is, you know, do we stay below this 21,858 or do we get back up on top of it?
Right.
That's going to be one of the key markers that I'm going to look for, because if we stay under it and chop around and sort of, consolidate here after this spike low, that's going to potentially set up, a fast
Mm-hmm.
move on the third wave.
Mm-hmm.
So we want to
Yep.
we want to watch this very, very closely.
Yep.
And when you look at it from the higher time frame perspectives, it really gets interesting. So there, look at that one.
Wow. Good timing.
Yeah.
Killer
This is your
timing.
yeah, right. This is your weekly, right?
Mm-hmm.
And we've got price pushed up a little higher, right? We went up, an extra quarter here,
Mm-hmm.
but timing was perfect. And look
Well,
where
the
the low
quarter is
was.
good. I'll
Yeah,
work with the quarter. That's great.
yeah. Yeah. I
Mm-hmm.
mean, look where the low was this week too. We came right on that half square and held it
Yeah.
so far.
Yeah.
But we were going to get an outside reversal weekly, but we've got an outside bar, right? We made a high on the week and we made a low on the week,
Yeah.
as compared to the last week. So
Mm-hmm.
this is a sign of change. We've got the timing here. We've got the timing on the daily. So it's time to be really alert. So weekly basis, if we get stuck below 21,082, then we're rolling over.
Mm-hmm.
And you can see that's where the previous high was here in July, which was really good timing, broke out of the circle, squared out, had a reaction, and then we had this last push up. So
Yep.
get below here, and this push is going to look like it was a false move.
Right.
So that's what we're going to be watching to see. Let's look at the monthly. I'm showing the monthly here because again, this 20,878 here, weekly was, what was it? 20,000 or 21,082. It's all in the
Mm-hmm.
same neighborhood.
Mm-hmm.
Get below here, and then this looks like, sort of a false move
Yep.
if we reverse. I mean, we've got 5 or 10 trading days left, I guess, in the week. If we got the
Mm-hmm.
holidays, we probably got 5 or 6 trading days left, full
Mm-hmm.
full
Mm-hmm.
trading
Mm-hmm.
days. So let's see what it does. If we sit on top of there, that's one thing. But if we get a close underneath, it's going to be more evidence of a potential turn here.
Right. When we do it, when we get a
Yeah,
turn under it. Yep.
that's right. The one I really want to show you is the calendar day. Look at
Mm-hmm.
this. We were talking about this a while ago, saying, man, it would be nice if we can get up and hit that 360.
Mm-hmm. And
Look at
so
this
we did.
we did calendar day. We got up to the
Mm-hmm.
360 with the contract change, right?
Yeah. Yeah. It's fine.
But there it is. Nice catch on the one by one, huh? Turning it
Mm-hmm.
down. And
Yep.
now we're getting stuck under this one by one.
Yeah.
So if we roll around here for a little bit, and maybe it takes time to get over to this next one by one to start pushing the next leg down. But here the key is 22,000.
Mm-hmm.
It's all in the same area. This 21.8 area, 22,000. It's going to tell us a lot on where we're going to go next, and how what's the path going to be based upon how it acts, at these pretty important spots. Anything you want to add on NQs?
No, I think it's all looking good. Just just follow through. We'll follow every week and we'll see what happens next. But it's all set up for now. All the timing came in, the Rebel cycle came in,
Yep.
and the shorter 90-day cycle came in. So let's
There's
see how it
plenty
works
of
out.
price and time relationships on multiple time frames and
Yes.
multiple views. So
Hmm.
that's when, in our work, we pay really close attention, and we've gotten an initial reaction, right? That's what you want to
Hmm.
see.
Yep.
You want you want the cycles to come in and then get a reaction, and then you let the technicals take over and dictate, okay, what does this mean? Is this major? Is this minor? Is it just consolidating, getting ready for the next move in the same direction? Or are we actually going to get a reversal? And that's what we're on sort of red alert for right now. All right, let's go take a look at the belle of the ball this year, Bitcoin,
Hmm.
and some very interesting developments here.
Hey, Ben, I called out the high last week, remember?
Yes, you did.
It's like,
Yes, you did. And look,
but
look
wow,
at,
look at the number up there, 108 perfectly, eh?
I mean, this thing, this it really likes this square and the position because it's just, I mean, look at the reaction where we're getting at major spots,
Wow, and
and
it's 180. That's really
yeah,
good.
it's
Hmm.
a, it's we have a square,
Hmm.
180 by 765.
Hmm.
So this is
It's
a
solid.
really,
Yeah.
really solid square.
Hmm.
So as long as we're below that 180, you can see and look at the reaction too.
Yeah.
Three drives, one, two, three. I mean, you could
Yep.
even say four if you wanted to get technical, but one, two, three
Hmm.
drives
Hmm.
into a full square with timing, price and time squaring out.
I mean, this thing's super weak, below 102.
Yeah. And you can see it's battling here at this 96.6.
Yeah. Like it
If
did in
it,
November.
yep, if it loses that, then we're opening up down to 85.
Hmm.
So I do believe I put a tweet out or a post, whatever you want to call it, on X this week and said, um, price and time here in, I think it was the weekly in Bitcoin.
Hmm.
Now's the time to sort of protect capital. And I
Hmm.
do believe, I've been a Bitcoin fits perfectly with the decentralization theme of the epic cycle. So I've been saying for the
Hmm.
last couple years, on the interviews I do with Dale and on X when I post
Hmm.
that while I had my doubts years ago, it certainly fits with the cycle
Hmm.
and the decentralization and less sort of centralized control. So I
Hmm.
said it's got the wind of the cycle, the major cycle at its back, so it should do well, and we did very well. But
Hmm.
this to me looks like a highs in. Whether or not it's the high, we can't say yet, but it is a high, and we have to treat it as such right now.
Hmm.
Let's look at the weekly, and you'll see more evidence. This is another price and time weekly basis.
Yep.
Uh, Using a square of 72, we're 1.5 over,
So
two and
that's
a half
180.
up.
That is that the same 180 as the other one, or is it a
Yep,
different
it's the
180?
same 180.
Oh, okay.
But
Okay.
it's weekly. This is weekly 180.
Hmm.
It's 180 by 108.
Yep.
And like a lot like Nasdaq, we got an outside bar. We
Hmm.
didn't quite, we didn't quite close below the previous bars, the previous high bars low, but that's an outside bar.
Hmm.
It's sort of like people had second thoughts, sellers came in, there was some questioning of the price getting up to where it got up to. So again, what does that mean? Are we going to V down into here or down to here? Probably not. Could we consolidate, make a high level consolidation and be really bullish? Yeah. I mean, look, if we could come all the way down here, this half square here around
70,000.
70,000, yeah,
Hmm.
70,500, and that's bullish, right? If we consolidate in here on top of this and on top of
Hmm.
this, that's going to be bullish. But I do believe a high is in there.
Hmm.
How major, we'll find out. Lastly, we can take a quick peek at the monthly. This 93,000
Yeah.
monthly basis is key.
Yep.
As long as we close over that and just kind of go sideways, sort of like this, we had this half square here at 56. Remember, this was like the 7, 8 months of
Hmm.
torture and then
Hmm.
took off. If we consolidate, go sideways over 93, it's bullish. Otherwise, we're probably going to have to come back and check this 74,000 level.
Yeah.
But we'll see. I mean, but
Hmm.
overall, it looks good. I do believe, based on the squaring out and the price and times, that we have made a high there. So we have to watch it and protect capital at this point. Anything you want to add on Bitcoin?
And we're good. That monthly looks like a nice 5 waves up, 5 wave
Yeah.
pattern,
Yeah,
three
it
waves
is,
up.
right? Like the fifth, right?
Hmm.
One, two, three,
Well, from the low, we
one,
have
two,
five up.
three, four,
Yeah,
five. Yep.
that's you could call that too. Yeah, but
Yep.
within from 22 low, there's five up too. One, two, three, four, five.
Yeah.
So,
So a high would not be surprising. Let's put it that way. The evidence is there. We'll see how what
mm.
price has to say about it. On the commodity side, let's talk about the commodities. The grains sideways. Soybeans look like it may have completed a little correction here today. We'll watch it in the next couple of weeks, see how it acts, and see if we can get that back up. Corn is grinding higher, but not really moving. It's just
Hmm.
sort of the word that came to mind when I was looking at the chart was grinding, and wheat is totally sideways. So we'll
Hmm.
leave those alone. Sugar is pulled back sharply in completing an ABCD, so we've got to let that go. Cotton is sideways, continuing sideways. It's starting to remind me of crude oil in that I find myself being bored with it, and just every time I look at it, say, okay, that's sideways, which means we got to pay attention because that's when they lull you to sleep is when they ram it. So I'll be watching that closely to make sure we don't miss that because the
Hmm.
move out of here should be really, really strong. Cocoa made a high um, on the daily, like 315 by 450. It's a big high. I'm watching that to see because that too looks like it's had sort of three legs up or five legs in total on
Hmm.
bigger time frames. So I'm going to watch that, see how that sets up. Either we're going to high level consolidate for another move higher, or there may actually be a short setup in there, which we have to watch for. But let's talk about the one in the softs that I want to talk about is coffee. We've been talking about this one.
Hmm.
I think people that have followed us on this one have done well. The on the daily, I want you to see because I again I'm getting a little cautious on this because the move we've seen from this low here in May to this high here, we did 144 by 144,
Hmm.
which is a really good square. And coffee likes
Hmm.
to do the 144s.
Hmm.
We then pulled back sharply, right? And then shot right up immediately to make a higher high, but we've since pulled back. So I really want to watch this. And we're also closing. You can see today we closed under this 327.64, this full square here. We start rolling over here and then can't get up and continue the run. This may be over. And
Hmm.
this up here may have just been a false break, but it's yet to be seen. So if you're still long or think I wouldn't go long if you're thinking about going long, if you're still long, tighten up your stops and be careful with this. Let's go to the weekly and you can see how important this level where we're closing is.
Yeah. Hmm.
I mean, right on the half square.
With a wild couple of years been for coffee and
I
cocoa and
mean, when it goes, right? And and
hmm.
and this, it may do something like this again. Like, if they're having
Yeah,
trouble
yeah.
with the if they're
Hmm.
having trouble with the crops, you can see this is starting to look like it's going to start triangulating here.
Hmm. Good to
So
shoot
if it
up again.
does, yeah, if we triangulate again, we'll put the boundaries on and take the break whichever way it goes because the moves
Hmm.
out of these triangles in this commodity are fantastic.
Hmm.
I mean, you can just see how it triangulates and goes, triangulates here and
Hmm.
goes. And it may do it again. I do know we squared out. It looks like we have a little bit of a false break action. Now let's see, how the pattern plays out. Let's look at the monthly, little perspective there. So you can see we
And
we we tried to
hmm.
push on this half square here, and now we're pulling back a little bit. So still we could pull back to here, super bullish. Pull back to here, still bullish. Right?
Yeah.
Pull back
Hmm.
to this 283. That would be the really, really bullish thing if the pullback could only get to here.
Yeah.
Because it would essentially be consolidating, at previous. all-time highs. So a little bit of caution in coffee. Let's watch it. Let's see how it develops. Uh, Worst case scenario, it's going to be a sharp pullback. Best case scenario, it'll triangulate and set up another long for us at some point, in the next few months.
Mhm.
So we watch it. Anything to add on coffee?
No, we're good.
Okay. Let's go to
The
the
year for
last one.
caffeine was the year 2024, right?
Cocoa and
Coffee,
coffee.
cocoa, coffee, everything.
Yeah. Yeah. Let's take a look at nat gas. Here's why I'm excited about nat gas.
New highs
We
here.
Yep, we had marked off these channels, right? Saying, these are the sort of levels, bands that it had been consolidating in, right?
The ranges, yeah.
This was your false break, right?
Hmm.
Came down here and then we pulled back up and then we were bouncing between this. Then last week we were talking about last couple of weeks we were talking about okay, we pushed up here, but we failed at that high, came back and sat on top of these highs. So that's bullish, right?
Hmm.
But we couldn't quite escape. But then look at what we're done now today.
Escaped.
Yesterday we pushed up to it.
Hmm.
Today we pushed out of it. So if we can get a close, let's look at this half square here over 4. Man, we're opening up 520.
Hmm.
And this is what we were waiting for. We want to sit on top of this whole congestion. And you'll see when we switch over to the weekly, how important this is. But this is a big move today. Yesterday, the highs were there. Today, we pushed through it.
Hmm.
So we want to watch next week to see if we get follow through and if we can stay on top of this. Let's look at what the level is for you there because it's not a square, like 365. In any case, we want to stay above the half square, which is about 342.
42, yeah.
Mm-hmm. All right, let's look at the weekly. See why this
Just,
is so important?
yeah, just getting started. That's what that is.
Yeah. Big triangle, right?
Hmm.
Multi-year triangle. And now weekly close, we're going to get over the full square at 371. This is why it's
Trend.
important. High here, low here,
Mm-hmm.
consolidation here, high here, low here, consolidation. We sit on top of that, it's up and
Belong.
out. Yes, it's up and out.
Hmm.
I don't know what that means. Are we getting cold weather? Are we going to have supply issues? Who knows? But uh, people are positioning in this right now for a move higher.
Hmm.
Let's look at the monthly. You can see where we're heading. 488.
Yep.
And now this is, let's see, how many months in a row do we have? 1, 2, 3, 4 months in a row. Higher highs.
Yep.
And
We have a trend.
when we came down here, you and I were talking about it. We were saying, and we even said it on the show a few times. Look at the value here that people have found
Yeah.
throughout the years of this thing, going back to
Hmm.
the early 90s. Every
Yeah.
time it was down in this range, it was a buy. And it tried you. It tested you because you were still in the triangle, but now it's starting to move. So for those that want to get involved, it
And you
looks
can see
good.
how very few times it comes down every 10 years or so.
Mhm.
It's not something that happens every other year.
No, nope. Here was about 6 years. Here it was 4 years.
Hmm.
Here was a long time between here and here.
Yep.
So it looks good. It's
Hmm.
finally starting to move. Anything else you want to add on this? I know you've been all over this one as well.
Well, we'll just have to stay on now that we're out of the triangle, well out of the triangle. So we just trade it like a normal trend.
Yeah.
Hmm.
Yep. So that's it on the commodity side. The topic I wanted to end up with, Barry, and if you need me to throw the screen back to you, I will,
Hmm.
is now that we've got pretty good evidence that things like the NQs and ES, uh, the Russell, the Dow, these things are making highs, and we got pretty good confidence that we've had a good high come in.
Hmm.
I want you to talk about how mentally and your approach to the charts and your approach to your work, what changes in the way you do things? Like you have your process, you don't change your process, but your orientation must change in some way. How do you do that, and what do you actually do?
So that's a good question. And the way I handle it is pretty much the way we talk about the markets every week. We look at the square points, the key levels, which is the major square and a 50% level. And if you think in terms of a trend, we're looking for a trend between these points, you know, from
Hmm.
full square to 50%, 50% to the next square, so forth and so on. And remembering, like, there are two ways we trade. One is with the trend and then counter trend.
Hmm.
Now, when we look at fuse lines, like very short-term trading that we post every day, then you're ready to go with, trend or counter trend. It doesn't matter because that's how that system sets up. It's trading around patterns, right? So
Hmm.
that's a kind of a no-brainer because your mind is um, used to that. But when you have a multi-year sort of a bull market, and then you're saying, well, we it's possible that we have a turn here. How do we handle that? Well, the easiest thing is what we talk about that quite often, and that is once a high comes in, we're looking to see how the next counter trend trade is going to develop. So the first thing is to switch to your mind to like counter trend. And because, there's two ways to do it, right? Like a lot of people half the people are thinking, well, this is a dip. We have to buy this dip and ride it up to the next
Right.
level, right?
Right. Yep.
And when they did it on these other times, it worked just fine. So they have no problem with it. And we have no problem with it because we trade the trend. And if it comes to a key level with time and price, the cycle's expiring, then we look at like the Rebel Yell cycle. Then we're a little bit cautious because we want to try to catch the other side. And our basic principle is, I mean, what we talk about is kind of how I trade, and I think we both do similar trades, which is we're looking for the start of the next trend, which has to start with some kind of a lower high.
Hmm.
So in this case, it's either a lower high or a false break. One of the two has to happen. And so on while we're having the counter trend, I'm just looking for key places for it to stall. And this is kind of, I mean, not kind of, this is exactly what Gann did. That's what Gann angles are all about. They help you really isolate that counter trend. And that's pretty much it. I
Because
look, I'm not
yeah, I
in
was going to
trend
say,
mode. Basically, you switch over to counter trend mode. Hmm.
right, because on Wednesday night, when you and I were messaging, you said, okay, time to look for a lower high.
Hmm.
Time to look at the counter trends, see where the counter trends ends up. That's where the focus is now.
Right.
And it was, and why I wanted to bring up the subject to people is, as you said, when you've been rewarded for the last 15 years for buying the dip,
Hmm.
that's what half the people or more than half the people now, anytime there's a dip, that's all they want to do. And there's no context to, okay, well, where is that high in the move?
Exactly. Where is the high? Exactly. That's the key thing. And and it's not like we're not against buying a dip, but it has to
Right.
be within the trend. So any dip that comes in on a square line, that's fine to trade. I mean, obviously, how we trade and how we look at these things, it has to be framed around what we use. So in this case, it will be the square. So using that, it's much easier to describe, and it's also easier to frame how the market's moving.
Right. And to your
And
point, in September, October of 22, I remember you saying, I think the low's in. We got to watch the counter trends to buy.
oh, exactly. I remember this false break. Remember that? We called that
Right.
out,
We
right?
had a false break. We had,
Hmm.
90 weeks. There was all kinds of,
Hmm.
geometry at that low. And you were like, I think there's a really good chance that the low's in. So we got to watch
Hmm.
the counter trends to buy. So it was sort of the mirror image of what we're starting to do right now.
And I don't know if can you see this? You can see this
Yeah.
part of the
Yeah.
chart, right?
Yeah. Sure.
So from here, you can see how we could have traded the long side for months till we got to the 90.
Right.
Once we got through there, well, it was long all the way up to the 50%.
Mhm.
Now I know we had time and price there from shorter time frames when we had that. Then we had the big ABCD down. Then we had this sort of the false break. I would almost call this the trap.
Right.
And once that reversed, we're back on track again. So the idea is it's not about not buying the dip. It's where are you buying the dip, If
Right.
it's
Yeah.
um and
Right.
here I think, we had a Rebel Yell cycle is really reliable. We had that and time and price is reliable. So a number of things came in and looking at the long-term work next year, first quarter doesn't look that bullish to me.
Right.
So,
Right.
so
Right.
right. And so considering all of those things, you have to take a stance but it's a very simple one. It's just I'm looking for that place where the counter trade could be initiated. So that's it. In the meantime, shorter time frame, sure, you can trade both sides. That's not a problem. But the same principle can be applied on a shorter time frame. That's why the fuse line patterns can be either long or short. You can go either way. But
Hmm.
here, that's it. I think there are only two outcomes, just like we talked about a couple of the other highs that we came into earlier, which is we can have a lower high or a false break. And that's why we talk about this 60-20 level so much. If we can settle above that, then we would be starting to look at the long side.
Correct.
That's 50%. So now that we broke through it, now on the counter trend, we're looking for, I mean, ideally, picture textbook would be to fail right around 60-20 and then roll over. But
Sure.
it's never that clean. So it's
No,
going to be some
no.
other kind of a mess. But we'll decipher it because we know where the brackets are. So 60-20 to the upside. So if we get above that, sure, we can have some kind of a false break. Otherwise, it should roll over. Why are we talking about all these rollovers and things? Again, it's because the high came in on your Rebel Yell, it was on the 5th, and there were 90-day cycles, other things coming in. So once that comes in and we have some evidence that cycle got traction to the downside, we have to give it the time to sort of sort it out, you know, and
Exactly.
it's going to sort itself out either above 60-20 or below. And
And
that's
it's
mhm,
funny as you were talking about the people that buy the dip, that's part of the reason why you get the counter trend and the lower high.
exactly. Yep.
And so
Hmm.
what we're looking for is that sort of recognition from the majority of people that, oh shit, this isn't going higher anymore.
Hmm.
It's
Hmm.
going lower. And that's when you get the sort of the fat pitch we talk about and the fast move of a lower high, or if it's bullish, a higher low.
Hmm. Absolutely. And it just goes on, and all the markets do it. It's been happening forever, so I don't think that's going to change. But I think to answer your question, the key difference is really that just watching to see where the market will stall out. And if it's really, market is weak, you're only going to get 1 or 2 day counter trend, 3 day max.
Mhm.
And I mean, those are really weak markets. So if it's anything more than that, then you have to pause and you deal with it as it goes. And that's pretty much it. I don't try to make too much out of it, just to keep it simple.
Right. So, and I'll try and summarize it. If I don't have it right, correct me. But
Hmm.
so Barry, just to wrap up and summarize this topic,
Hmm.
and correct me if I get this wrong, but what I heard you saying was the difference is the type of counter trends you're looking for. Like after the lows in October of 2022, you were looking for pullbacks for the opportunity to buy. Now that we've made this high in the S&P and Nasdaq with timing and cycles
Hmm.
and all the things that we've been talking about for weeks and weeks and the technicals, and we've gotten a reaction. Now
Hmm.
you're looking at pullbacks for possible sales. So
Exactly.
it's
And to isolate that, that's
right.
the job, right? Is to isolate that counter trend.
Right. So the difference is the process is the same. It's just the orientation is different based upon
Exactly.
where we are in the move. And in this case, we're at what we think is a high based on evidence. And in October of 2022, it was that we were at a low based on evidence. So
Exactly.
listen, everybody, we this will be our last show before Christmas. Maybe there might be a Christmas Eve special. We'll see how things go. But we really appreciate, want to wish you and all your families Merry Christmas and Happy Holidays. We appreciate the support this year. Please continue to to like, share the links with people you think that might be interested or could benefit from this. We really appreciate it, and we appreciate your support. So thanks again for a really good year, and great job, Barry, on this week's show. I know it's not going to be boring the next couple of weeks, so we will be around and
Mhm.
recording. Great job on triangulating this high, and let's sort of
Mhm.
see how it comes in and what it produces.
Yeah, let's see how it all goes. I think it's always something about trading, right? It's always next week we have to wait to see what happens.
Exactly. Exactly.
Anyway, all
So
right. Great. Good job. We'll talk to you guys next week. I'll see you next week.
excellent. Take care,
Uh-huh.
everybody.
All right. Bye-bye.
Bye bye.
Thanks.